This is the image they tried to bury before the ink was dry. A wall of red across every trading terminal on Wall Street. Traders standing frozen at their desks on the floor of the New York Stock Exchange, hands on their heads, mouths open, watching numbers fall like bodies from a building. As of 9:47 a.m. this morning, Wednesday, March 4th, 2026, the Dow Jones Industrial Average has plunged 1,843 points in the first 47 minutes of trading. The S&P 500 is hemorrhaging, the Nasdaq is in freefall, and the cause is not China, it is not a pandemic, it is not a rogue algorithm. For the first time in modern history, America's closest ally, its neighbor, its largest trading partner, and the country most Americans treat as a polite afterthought, has just detonated an economic weapon of mass destruction. Canada has flipped the kill switch, and Wall Street is panicking. Breaking news out of Ottawa this morning confirms that Prime Minister Mark Carney, the former governor of the Bank of Canada and the Bank of England, arguably the most financially sophisticated leader on the planet, has signed an emergency order in council activating what sources inside the Canadian government are calling the Economic Sovereignty Protocol. We are talking about the immediate suspension of all energy export permits to the United States. We are talking about a full embargo on Canadian crude oil, natural gas, uranium, and hydroelectric power. We are talking about the freezing of $68 billion in American corporate assets held in Canadian subsidiaries. We are talking about the invocation of the Canadian Investment Protection Act to block all U.S. acquisitions of Canadian companies pending a national security review that could last years. This is not a tariff. This is not a negotiation tactic. This is economic war declared by a nation that controls the arteries of the American economy. In this special report, we are going to break down exactly how Canada gained this leverage. We are going to walk through the financial chain reaction that is destroying Wall Street as we speak. We are going to explain why the White House has no good options. And we are going to answer the question nobody in Washington wants to ask. Can America survive a Canadian siege? Buckle up. History is being written in real time. To understand why this happened today, we have to go back 72 hours. On Sunday night, President Trump, emboldened by his ongoing trade war and reportedly furious over Canada's refusal to renegotiate USMCA on his terms, signed an executive order imposing a blanket 50% tariff on all Canadian imports. Every product, no exceptions, no phase-in period. Sources inside the White House say the decision was made at Mar-a-Lago over dinner, without consultation with the Commerce Department, without input from the Treasury, and without warning to the Canadian government. The executive order was posted on Truth Social before the ambassador in Ottawa was notified. But here is the catch. Trump's team assumed Canada would do what Canada always does: complain publicly, retaliate symbolically, and ultimately capitulate. That has been the pattern for decades. The Americans push, the Canadians absorb, the relationship survives. Not this time. Mark Carney is not Justin Trudeau. Here is what you need to understand about the financial plumbing of this crisis. The United States imports approximately 4.3 million barrels of Canadian crude oil every single day. That represents 62% of all U.S. crude imports and roughly 24% of total American refinery input. The refineries in the Midwest, the ones in Illinois, Michigan, Ohio, and Minnesota, were specifically built to process heavy Western Canadian select crude. They cannot switch to light, sweet crude from the Permian Basin overnight. The engineering does not allow it. The pipelines do not connect. The sulfur content is wrong. According to leaked analysis from the Department of Energy obtained by Bloomberg, a full Canadian oil cutoff would create a refining bottleneck within 96 hours that would take U.S. gasoline production offline by 30 to 40% within 2 weeks. Gasoline prices, currently averaging $3.89 a gallon nationally, would spike to an estimated $7.50 to $9 a gallon in the Midwest and $6 to $7 on the coasts. Heating oil in New England, which relies on Canadian supply chains, would double. Diesel, the lifeblood of the trucking industry that moves 72% of American freight by weight, would become scarce within days. The data shows a cascade, not a crisis, an evisceration. But oil is only the first domino. Canada supplies 85% of America's electricity imports. New York State alone imports 16% of its power from Hydro-Quebec. Vermont gets nearly 30%. Minnesota draws from Manitoba Hydro. If the lights start flickering in Manhattan, the financial markets do not just crash, they shut down. The New York Stock Exchange cannot operate without reliable power. Trading halts. settlement systems freeze. The entire clearing infrastructure of the American financial system runs through servers that need electricity to function. Sources at Con Edison say the grid redundancy plan for New York City assumes Canadian power as a baseline, not an emergency supplement. Take it away, and the system runs at surge capacity within hours. The grid was not designed for this. Nobody planned for Canada to become an adversary. And here is what nobody is talking about. The backup generators on Wall Street run on diesel, the diesel that is about to disappear. It gets worse. Canada is the largest foreign supplier of uranium to American nuclear power plants, providing approximately 14% of U.S. reactor fuel. The Strategic Uranium Reserve, according to Congressional Research Service data, holds roughly an 18-month supply under normal operations, but a simultaneous oil and power crisis would increase demand on nuclear facilities, accelerating the drawdown. The lumber supply for American homebuilders, 31% of which comes from Canadian softwood, vanishes overnight. The potash that fertilizes American farmland, $6.2 billion worth annually, stops at the border. The aluminum smelted in Quebec that goes into American fighter jets and Ford F-150s, gone. The nickel from Sudbury, the cobalt from Ontario, the lithium compounds processed in Quebec that feed the electric vehicle supply chain Biden spent $7.5 billion subsidizing, all of it cut off. We are not talking about one industry being disrupted. We are talking about the simultaneous strangulation of energy, agriculture, housing, defense, and the electrical grid. This is a coordinated economic decapitation strike, and the weapon is geography. Now let us talk about why Wall Street is in full cardiac arrest this morning. The futures market saw it first. At 4 a.m. Eastern, when Asian markets relayed the Ottawa announcement, S&P 500 futures plunged 6.3% in 11 minutes, triggering the first circuit breaker in overnight trading since the pandemic crash of March 2020. By the time the opening bell rang at 9:30 a.m., the sell orders were stacked so deep that market makers on the NYSE floor were reportedly refusing to provide liquidity. According to sources at Goldman Sachs, the bank's trading desk received margin calls on energy derivatives totaling $14 billion before noon. ExxonMobil shares dropped 19% in the first hour. Valero, the refiner most exposed to Canadian crude, fell 34% and was halted twice. Phillips 66 is down 27%. Marathon Petroleum is down 23%. The energy sector of the S&P is on pace for its worst single-day performance since the 1973 Arab oil embargo. But here is what the mainstream media is not showing you. The contagion is spreading to the banks. JP Morgan Chase holds an estimated $42 billion in direct lending exposure to the Canadian energy sector. Bank of America holds $28 billion. Citigroup holds $19 billion. Wells Fargo holds $16 billion. These are not speculative positions. These are infrastructure loans, pipeline financing, and asset-backed securities tied to Canadian resource extraction. If Canada freezes American corporate assets, those loans go from performing to non-performing overnight. The credit default swap market is already pricing in a 340 basis point spike on Canadian sovereign debt, but the real danger is the counterparty risk cascading through the American banking system. Sources at the Federal Reserve Bank of New York say an emergency liquidity meeting was convened at 7 a.m. this morning to discuss opening the discount window for emergency lending. The last time that happened on a Wednesday morning outside of a scheduled crisis was September 17, 2008, one day after Lehman Brothers collapsed. The parallels are not comforting. They are terrifying. This is where the situation escalates from financial crisis to geopolitical catastrophe. Sources inside the West Wing describe the mood as apocalyptic. The president is reportedly locked in the Situation Room with the National Security Council, the Joint Chiefs, and his trade advisors, but the screaming can be heard down the hallway. Trump views the Canadian action as a personal betrayal by Carney. He reportedly called him a central banker who thinks he is Churchill. But here is the impossible position Trump is in. He cannot back down. He spent 3 days bragging about the 50% tariff as the greatest trade deal in history. Truth Social is full of posts calling Canada a parasite that finally got what it deserved. The MAGA base is electrified. Retreat looks like weakness. But he also cannot escalate militarily. You do not invade Canada. The logistical absurdity aside, NATO Article 5 could theoretically be invoked. America's European allies, already furious over tariff threats, would face the unthinkable question of whether the Mutual Defense Pact applies when the United States is the aggressor against a fellow member. So Trump reaches for the only weapon he has left: sanctions. Sources say the White House is preparing an executive order to freeze all Canadian government assets held in American banks, estimated at $12 billion, and to impose secondary sanctions on any nation that continues trading with Canada while the embargo is in effect. But here is the catch, and this is the part that should keep every American with a 401k awake tonight. Canada holds $312 billion in U.S. Treasury securities. If Carney retaliates by dumping even a fraction of those bonds on the open market, the yield on the 10-year Treasury, already at 5.2% this morning, could spike past 6%. That does not sound dramatic until you realize that every mortgage rate, every car loan, every credit card in America is benchmarked to that yield. A 6% 10-year means 8% mortgages. It means the housing market seizes. It means corporate borrowing costs explode. It means the National Debt Service, already consuming $1.1 trillion a year, balloons by hundreds of billions. Canada does not need a single soldier to bring the American economy to its knees. They just need to sell the paper. Let us push the scenario to the extreme. Imagine it is Friday. The embargo has been in effect for 48 hours. Gasoline stations in Minnesota and Wisconsin are running dry. The lines stretch for miles. Fistfights are breaking out at pumps in Duluth. The governor of Michigan has declared a state of emergency after the Enbridge Line 5 pipeline, which carries 540,000 barrels of Canadian crude daily across the Straits of Mackinac, goes silent. The auto plants in Detroit, already operating on thin margins after the 2025 recession scare, shut down because they cannot get Canadian parts. Ford announces a temporary layoff of 22,000 workers. GM follows with 18,000. Stellantis shuts its Windsor-Detroit corridor operations entirely. The United Auto Workers Union, which endorsed Trump in 2024 on the promise of trade protection, issues a statement calling the tariff a catastrophic miscalculation that is destroying American jobs. The irony is suffocating. The tariff designed to protect American workers is the weapon that put them on the unemployment line. The political fallout is radioactive. Congressional Republicans from Midwestern states are breaking ranks. The senator from Michigan calls the tariff suicidal on the Senate floor. The representative from Minnesota introduces a bill to strip the president of unilateral tariff authority. The senior senator from Ohio, a Trump loyalist, goes quiet. Sources on Capitol Hill say at least 11 Republican senators have privately told the majority leader they would vote for a tariff reversal if it came to the floor. The polling numbers, already soft after the Japan crisis and the wipeout poll we discussed last week, crater. An emergency Fox News survey shows Trump's approval among independents has dropped to 29%. Among voters over 55, his core demographic, it has fallen to 41%, the lowest of his presidency. The donors are panicking. The Koch network, already skeptical, publicly calls for tariff reversal. The Heritage Foundation, which designed much of the administration's trade policy, goes silent. The Wall Street money, the $200 million bundlers who financed the 2024 campaign, are making phone calls, not to the White House, to DeSantis, to Vance, to anyone who might replace him. The invisible primary for the next election starts in the rubble of this one. But here is the psychological dimension nobody is examining. Donald Trump built his identity on the art of the deal, on domination, on forcing the other side to blink. Mark Carney is the one opponent Trump has never faced, a man who understands money better than Trump does. Carney ran the Bank of England through Brexit. He managed the Bank of Canada through the 2008 financial crisis. He designed the global framework for climate financial disclosure. He is not a politician playing at economics. He is an economist who became a politician, and he knows exactly what he is doing. Sources close to the Canadian government say Carney told his cabinet that Trump has never faced an adversary who controls his supply chain. He does not know how to fight this war. This is not a real estate negotiation. You cannot bully physics. You cannot threaten a pipeline into flowing. Carney is reportedly calm, analytical, almost clinical. While Trump is raging and threatening, Carney is publishing daily economic bulletins showing Canadians exactly how much pain they are absorbing and exactly how much more pain they are inflicting. It is the strategy of a central banker managing a crisis, and it is driving Trump insane. For a man who needs to be the smartest person in every room, facing an opponent who demonstrably is the smartest person in every room is a form of psychological torture. The international community is watching this with a mixture of horror and strategic calculation. Beijing has already offered Canada an emergency energy swap agreement, offering to buy Canadian crude at a 10% premium above Brent pricing if Canada redirects supply away from the United States. This is the nightmare scenario the Pentagon has warned about for a decade, a North American energy divorce that pushes Canada into the economic orbit of China. If Canadian crude starts flowing to Chinese refineries through expanded Pacific port capacity, the strategic energy independence that America has spent 50 years building evaporates in a single presidential tantrum. The European Union, already negotiating its own trade tensions with Washington, has offered Canada a fast-tracked comprehensive trade agreement as an alternative to American dependence. Sources at the European Commission say the deal could be finalized within 90 days. Germany, desperate for energy security after the Russia debacle, is reportedly offering to finance a Canadian LNG terminal on the Atlantic coast, specifically designed to supply European markets. Japan, reeling from its own financial crisis, is negotiating uranium purchase agreements directly with Saskatchewan mining operations. The world is reshuffling around America, and America does not even realize it yet. What does the Federal Reserve do? Jerome Powell is facing the worst monetary policy dilemma since Paul Volcker stared down 14% inflation in 1981. Inflation is about to spike because of the energy shock. Under normal circumstances, the Fed would raise rates. But the economy is also about to contract because of the supply chain disruption. Under normal circumstances, the Fed would cut rates. You cannot do both. This is stagflation, the economic nightmare that destroyed Jimmy Carter's presidency and haunted economists for a generation. Sources at the Fed say Powell has told his inner circle that the central bank has no tools designed for this scenario. The playbook does not exist. They can provide liquidity, but they cannot create oil. They can lower borrowing costs, but they cannot reopen the border. The Fed is a spectator in a crisis that requires diplomacy, not monetary policy, and the diplomat-in-chief is the man who caused the crisis. History teaches us that economic wars between neighbors rarely end with a clean winner. The Smoot-Hawley tariffs of 1930 turned a recession into the Great Depression and cost the Republicans both chambers of Congress. The British blockade of Napoleon's Europe destroyed French commerce, but also starved British textile mills of cotton. The OPEC embargo of 1973 reshaped global energy policy for half a century. Economic siege warfare creates mutual destruction, but the side that controls the essential resources holds the advantage. And in this fight, Canada controls the resources. This is exactly what the founders feared when they wrote about the dangers of concentrated executive power in trade. The Constitution gives Congress, not the President, the authority to regulate commerce with foreign nations for precisely this reason, to prevent a single individual from provoking an economic catastrophe through impulsive action. That safeguard has been eroded by decades of congressional delegation. The Trade Expansion Act of 1962, Section 232, IEPA. The president now wields tariff authority that was never designed for one person to hold unchecked, and the bill is due. We are witnessing the stress test of the North American economic order. For 80 years, since the end of World War II, the United States and Canada have operated as an integrated continental economy. The supply chains are not just linked, they are fused. The auto industry alone sends parts across the border 8 times before a single car is finished. The defense industrial base shares classified manufacturing. The power grids are physically connected by 36 major transmission lines. Severing this is not like imposing tariffs on Chinese electronics. It is like amputating your own arm and expecting to win a boxing match. The question is not whether America can survive without Canada. It can eventually, painfully, at enormous cost. The question is, how much damage is done before the pride of one man in the White House allows him to pick up the phone and say 3 words he has never said in his entire life: I was wrong. As we close this analysis, watch for 5 things in the next 48 hours. Watch for the Strategic Petroleum Reserve announcement. Sources say the Energy Department is preparing to release 30 million barrels as an emergency measure. But at current consumption rates, that buys less than 2 days of breathing room. Watch for the bank earnings revisions. JP Morgan and Goldman are expected to issue profit warnings by Thursday morning that could trigger a second wave of selling. Watch for the congressional revolt. If 15 Republican senators publicly demand tariff reversal, the political math changes and the override vote becomes real. Watch for the Canadian bond dump. If the Bank of Canada begins selling U.S. treasuries, the yield spike will crash the housing market within a week. And watch for Trump's 3 a.m. Truth Social post. Because in this administration, that is when the real decisions are made. Not in the Situation Room, not in the cabinet, on a phone screen, in the dark, driven by rage. For one man sitting in the Oval Office, surrounded by advisors who are afraid to tell him the truth and a base that demands escalation at any cost, this is the moment the art of the deal meets the science of economics. And the science is winning. The pipelines are empty. The refineries are going dark. The trading floors are soaked in red. And the longest undefended border in the world just became the most expensive wall in human history. Not the one Trump promised to build on the southern border, the one he accidentally built on the northern one. Subscribe. Stay close. The history books will not be kind to this week, and the week is far from over.